Every crypto cycle has that one moment where everything changes. The point where, I don't know, maybe Bitcoin takes control. All coins bleed out and the next move is kind of obvious. And that moment is normally triggered by dominance. And we're going to talk about two big factors in this video. Now, I think this level is pretty important. It's going to tell us one way or another are we going to see some relief? But we have had some major alt season fake outs essentially. And it seems like we're just going round and round in circles. But let's talk about it. So today, we are going to talk about some important things because this on the screen is Bitcoin on the monthly. We don't want to talk specifically about the Bitcoin price or the news headlines, more importantly. We want to talk about the randomness of why this market is very different, but the backbone of it is all due to three things. Bitcoin is taking liquidity. This means that altcoins are getting somewhat crushed still. And the main reason why essentially alt seasons are not happening. The thing is, I think anyways, we'll talk about dominance in more detail, but I think a lot of people, especially if you're investing or even trading the market, ignore the obvious in the room. You ignore dominance, you ignore where the smart money goes, and you ignore where the stable currency side of it is. So essentially what we're going to do, we're going to go through the nitty gritty of it. And I'm hoping you come back and watch this over and over again so you get an idea of it. The reality is here, you need to like this video, you need to subscribe to the channel, and you need to get on the right side of the market. I have been telling a lot of people pretty obviously we are not going to be seeing a big boom in the altcoin market. That has been obvious for the last year now. Let's get into the fundamentals. Cycle principle. Every single bull market starts off in the same way. Bitcoin takes liquidity first, equals dominance rising, obviously risk off if you're in altcoins, and dominance topping will equal risk on. It's as simple as that. There's nothing scary about it, but Bitcoin is by far the most obvious play in this cycle, and it has been, and I've been saying this for a while. That is the longest incline, you could argue, for Bitcoin dominance in its entire history. Yeah, people missed out on that when I talked about it. But I want to talk about this level here. This 60% region level. And this is the monthly time frame. It looks a bit mental. And I've got three situations on my chart. We have obviously a base case where we do a bit of a correction, potentially an ABC correction, a bit of relief, which would give us down to that 55, 52% level, right? That's an obvious. We've obviously got the bull case where if we nuke down to those levels, we're going to get a proper decent-ish, I would say ish, bullish market, but that probably will not give you 10x's across the board on everything. And then if we go higher, it is obviously very, very, very bearish for altcoins. Now, obviously, yes, it could mean that Bitcoin price has also fallen and the altcoin prices have fallen even further. But we'll come to that bridge when we get there, obviously. But this is the situation. This level here, right, when we zoom in on it a little bit, it's important in terms of structure for obvious reasons. If we go down to the 3-day time frame, you can kind of see how we've kind of hit it. Now, the reality is we have melted from these points and we had a little bit of relief. We're nothing crazy, but we have bounced up. What this is just key level structure. Now, obviously, if we're below that level and we continue to go down, it's going to give a short burst of life with the altcoins. If we go higher and into the 60%, 62, 65 or higher, that basically equals Bitcoin has drained the market. Or does it? Well, kind of. Because you've got to think liquidity. Liquidity will flow to the king before it flows anywhere else. Bitcoin is still very attractive. Bitcoin is still safer money. Bitcoin is like gold. And if we do have jitters across the entire macro event of the market, in terms of obviously the AI side of it, the quantitative easing, quantitative tightening situation, the FOMC, the inflation rates, what Donald Trump's going to do or what he's going to have for his breakfast, it's going to affect the market, it's going to affect us alongside the dollar. So yeah, we have to look at this with a lot of open-mindedness, but ultimately we have to look at the obvious historical patterns. Because in the past, we can talk about quite a lot of situations in terms of where do we bounce from? What do we do? Now, dominance usually bottoms in September, you could argue. It's happened before. That big circly thing is where we bottomed before. And you could also talk about how Bitcoin dominance and stuff like that around the whole dominance surges in December. We've had periods across 2023, 2024, if you remember, where we had a bit of a run, surged. We also had it last year as well with the inauguration, a bit of a surge. But The reality is every market is different. They just rhyme in different ways. But if you watch my channel, you will know I say a certain phrase. I say that Ethereum holds the keys to the alt-season market. That could form the cycle low. Ethereum is by far the biggest weight dominance against Bitcoin for obvious reasons. Now, this is where we are. This is the BTC chart of it. You could argue we have had an impulse, we pull back, and we maybe bottomed, right? Altcoins have bled throughout this period. So has Bitcoin, essentially. But every single time Bitcoin makes an approach towards its all-time high, we've had a spike. What has happened during this period? Guess what, boys and girls? Bitcoin made an all-time high within this period of this going down. So that just showcased that the liquidity rotation has happened in the way that I explained it. It will go to the king first. But it really hasn't matured beyond that. Obviously, yes, you can talk about the government shutdown, liquidity getting drained, other bits and pieces around gold as well. That becomes a bit of a problem. Now, the reality is very simple. What if this pattern repeats, i.e., we go up? That would mean maybe the psychology of it will be altcoins get relief bounces, which we could argue anyways we're expecting. Because when you talk about the bigger picture here, we are incredibly fearful, really fearful right now. It's looking ugly. So you could argue, psychology, you are going to get a bounce soon. That would equal maybe Ethereum runs a little bit, maybe Bitcoin chills out a little bit or bounces alongside it and we get a bit of a flurry, therefore leading to other indicators to showcase a bullish risk on period. Sounds rally. But, psychology, why do people get hurt? They only just look at one thing, Bitcoin dominance, Bitcoin price, Ethereum price. When dominance rises, people think altcoins are undervalued. In reality, they've just been repriced, right? That's the psychology of it. But people forget about this chart. This is a stable currency dominance. I've talked about this a lot. And you can see, consider DCA way up in those levels is basically we're in a bear market, start buying, right? Basically. When we go low, it equals we are getting an alt season. And we've had it on the chart here. You can see it. Failure. Didn't even get there, right? So we needed to go much lower than this 5%, but this would equal that all the money that is existing in the market is flying into everything. Risk on, boom. But that isn't as easy as that because we've got to look at the fact that, well, what is dollar doing? What is the dominance doing? What is Bitcoin doing? What's gold doing? So yeah, it gets a bit hard. Looking at the technicals here, let me draw a line here. Whee! Are we back at the range highs? Maybe. Are we going to reject? Maybe. Are we going to go higher? Maybe. It's too early. And I know that's boring, but we need to wait for clear direction, a clear bias. We haven't had that. And I think for me, as a content creator, it's been the hardest part for this market is we haven't had clear direction to tell us what's going to happen because the trend is your friend. But ultimately, I would argue I have been on the fair side of the market for the most part. But ultimately, I'm still hedging because in my Patreon, if you know this, I sold a bit of Bitcoin quite a while ago. I'm about 25% in stables, which is fine. I'm hedging that we're going to go lower and hopefully be rebuy. But ultimately, I'm not going to be too flippant about it. I'm going to say this. I've still got 75% of my Bitcoin and I hope we go higher. I will explain my reasons in a minute. By the way, there is a Black Friday deal. First time I've ever done this. Mainly for new members only, realistically. 35% off an annual, so you can get it incredibly cheap. Get in for the first year. You'll enjoy it. Now, the reason why I say I hope we go higher, as much as I like this chart, and I have put on here, what if this is the top? And it could be, I know, but ultimately I am still holding out that we do go higher, just because it feels a little bit off due to what's happened elsewhere. Now, the simple map and the simple play, I've kind of alluded to it. If we drop, and I say like drop, down, low, boom, you're going to see a bit of relief elsewhere. The Ethereum side of it will move, obviously Solana, XRP, whatever. You may well also as well just see Bitcoin go up because of interest in the market and ETF inflows have gone positive. We will talk about that in a second, but briefly. Obviously, yes, if we break higher, you're going to see Bitcoin being probably the safer play to hold on to, but your altcoins are going to nuke, which is not going to be fun, is it? But until then, the structure is still kind of, I think, undecided. It's still very, very, early. So there's no real alt season yet. Invite a calm position. Don't get hyped up over nothing. Because whether you like it or not, the ETFs are telling us where the money is flowing. And the dominant is just backing it up. And then the price is the price. Just play the market. Keep it simple. Now, finally, the traders who survive this cycle are going to be the ones that are not chasing the pumps and got clear rules. Now, one rule that people have mentioned, I know Ben Cohen's mentioned this a few times, is the simple moving average 50. You can use that. Everyone's got a different way of analyzing the market or skinning the cat. Personally, I prefer structure. But as well, you can look at other sides of it as well. If you go on to the moving average 200 and go to the 3-day time frame, you've also got situations where it looks a bit more like this, or even the 2-day time frame. There's so many different ways to look at this market in whatever way you want to look at it. 200 moving average is usually a good one. 50 moving average is usually a good one. It depends on what you fancy. At the end of the day, the reality is this market is pretty brutal. But dominance will, I think, keep you on the right side of the market. So yeah, we're done. If you enjoyed this video, please do leave a like. Comment as well what you think. It does help. But watch this video. This will tell you a lot about quitting. Basically, don't quit.